Saving for a down payment doesn't have to feel like climbing a cliff with no rope. You can speed it up by running a real plan that fits your life, not a fantasy of perfect discipline. Here's the idea: a focused sprint of about 12 weeks where you cut waste, increase income, and park every extra cent into a dedicated fund. It sounds simple, but the magic happens when all three moves stack up and you stick with them even when life gets loud. First, decide your target down payment amount and a rough timeline, and commit to it in one place where you can see it daily. Put that number into your notebook or notes app so every financial choice knows what it's aiming for. Open a separate savings account or a high-yield option just for the down payment, and treat that account as a temporary home where only this purpose lives. Name it clearly, like home fund or down payment drive, so every deposit feels intentional rather than accidental. For a week, write down every purchase, even the tiny ones, and sort them into categories: groceries, transport, meals, and impulse buys. By the end of the week, you'll see the patterns that quietly drain money, and you'll stop guessing where it went. During the sprint, you rely on three steady moves: cut waste, automate savings, and boost income, all while keeping a simple math rule in mind. These moves are practical, repeatable, and they stack up quickly when you apply them consistently over the weeks. Start with a careful audit of every recurring expense, especially those subscriptions you rarely use, memberships you forgot about, and apps that quietly charge you each month. Cancel what you can live without for a few months, and renegotiate what you can, because small changes add up to big shifts. Negotiate bills when possible, switch plans to cheaper tiers, and seek bundles or student discounts where they exist. The goal is to free up cash without sacrificing essential things. Even modest cuts, like moving from a premium plan to a mid-tier, can free hundreds over a year if you stay patient. Consider the math of small cuts. If you cut one streaming service and some frequent takeout you didn't truly need, you might save around $40 to $60 a month, which compounds quickly over weeks. If you do the math consistently, those dozens of dollars become hundreds and then thousands, and your progress accelerates without feeling punitive. Set up automatic transfers on payday so you never see the money before you decide what to do with it. This turns saving into a fixed habit rather than a reactive choice. Treat the transfer as a fixed expense, like rent or your own personal bill, and you'll create a real cushion without mental battles every week. Choose the amount based on your target and current spend, and if you can do more, push a bigger percentage so you're not leaving useful money on the table. Keep the money out of easy reach by placing it in a separate account or a fund that's not linked to your debit cards, but still accessible in an emergency. Look for a side hustle that fits your skills and your schedule, whether it's freelancing, tutoring, driving, or selling unused items online, and commit to a realistic monthly goal. Don't overpromise yourself. Pick something you can sustain for 3 months and still sleep well, so you don't burn out and abandon the plan. Windfalls like tax refunds, cashback, overpayments, or a small bonus are not luck. They're opportunities to accelerate your savings and should be treated as promotions for your future home. Whenever you get one, send it straight to the down payment fund instead of spending it on temporary pleasures. Keep a mindset of found money, where any unexpected money becomes fuel for your goal rather than a chance to upgrade your current lifestyle. Develop a habit to move any surprising money into the fund within 24 hours, so your brain learns to link surprises with progress. Every week, open the fund, check the balance, and compare it against your target. The ritual keeps you honest and shows you where you stand in real time. Ask yourself what worked, what didn't, and where you can trim more without hurting your life or your ability to live with certainty. Think of the down payment as a daily goal rather than a distant dream. Break it into micro habits you can perform every day, like saving a small amount from every paycheck. Turn saving into a game, a puzzle you enjoy solving each week, so you feel a sense of progress rather than deprivation. Rule your spending by essentials first, and treat non-essential items as opportunities to advance your future rather than as rewards you owe yourself. That mindset makes the numbers feel fair and gives you a reason to say no to impulse purchases when the clock is ticking toward your deadline. Keep the fund safe with insured accounts and avoid touching it for non-emergencies. If you're tempted, picture your future home and remind yourself there are easier ways to manage today's mess. If your timeline is longer than a few months, you can consider a tiny, low-risk option like a short-term bond fund, but stay conservative so you don't risk the goal. Avoid lifestyle inflation, where your paycheck grows, but your spending grows even faster, because that cheat code is the easiest path to never reaching the goal. Don't raid the fund for groceries or rent. If you fall short, adjust your daily spending elsewhere instead of pulling from your future home. Here is a quick mental map of the sprint. Define your target, open the fund, track every dollar, cut waste, automate, earn more, collect windfalls, and review weekly. Keep your eyes on the prize with a daily nudge that this money is for your future home. Not an impulse buy you'll regret later. To put this into action, start today by naming your fund, linking it to your paycheck, and making your first automatic transfer the moment your money hits the bank. Then choose a sustainable side hustle and set a realistic weekly savings amount that you can meet with discipline and without guilt. Let me give you a simple real-world example so you can picture it. You aim for a $12,000 down payment in 12 weeks, and you break that into weekly targets that feel doable. That means you need an average of about $1,000 per week saved, plus extra from windfalls and earnings, after you've trimmed the obvious waste. If you already have $4,000 saved, your weekly target drops to around $750, and any extra income can cover the rest, making the plan feel reachable rather than scary. You can adjust as you go, extending a bit longer if life throws a curveball, but you'll still be moving forward. Saving speed isn't a mystery. It's a disciplined routine that respects your time and money and uses your life as the laboratory where you test what actually works. Try the 90-day sprint, adapt it to your numbers, and tell me how it goes in the comments. And don't forget to like and subscribe for more practical money moves.